Thank you for joining me today. My name is Anthony Murphy, the CEO and founder of Lern Investment Partners, and today I'll be presenting to you on the Lern Funds business. Lern Funds business was established to provide investors access to a diverse range of investment opportunities. At Lern Funds, we manage three funds. Our flagship fund being the Lern Alternative Investments Fund, or better known in the market as LEIF. LEIF actively manages a diversified range of exclusive, hard-to-access funds from around the world. The Lark Mortgage Income Fund focuses on generating solid, risk-adjusted returns for investors through a diversified range of actively managed first mortgage investments. And finally, our latest fund in the stable is the Lern Select Alpha Fund. Lern Select Alpha Fund leverages off our relationships that we have with our LEIF managers and also family office and professional investor networks, and picks the best ideas that are fully vetted from these investors into the fund. I think it's first important to focus on our investment committee process and the due diligence that day by day we go through at Lern. So if we look at a year in a whole at Lern, on average, we will vet approximately 500 plus managers a year. Of those 500 opportunities that we see, on average, we will meet with 250 managers a year, so roughly one a day. And some of those are existing managers that we're invested in, and some of those are new managers that we may be interested in investing in. Post this initial screening process, we then provide a specifically templated due diligence document to each of these managers, and that's approximately 100 a year. Post this, we'll then have investment committee meetings with these managers, and sometimes that will be multiple investment committee meetings, depending on how we're feeling about the manager and deciding whether or not we allocate to them at that time in the market. I think first of all, before we dive into the three funds today, it's important to talk about what goes on in our investment committee on an ongoing basis at Lern. Because of the success of LEIF, particularly over the last 3 years, we have a number of managers that are inbound into Lern that are looking to work with us. So approximately on average, we have about 500 managers a year that come into the business through a wide range of resources. Of those 500 managers that come in, on average, we have 250 meetings with those managers. Post those initial meetings, we'll send out approximately 100 due diligence questionnaires that are specifically designed for each strategy, i.e., a due diligence questionnaire for a private equity fund is not the same as a due diligence questionnaire for a long-short equity fund or a private debt manager. Post this, we'll have approximately 50 managers present to the investment committee, and that might be across a number of different meetings with the IC. Some managers will have one meeting with initially, others it might be 2 to 3 in order for us to become comfortable. Following this, we'll end up with a short list of about 30 managers that are on our effectively approved product list. That doesn't mean we're investing in 30 managers at any period in time. We'll get to that later, but approximately we'll have 30 managers effectively on our list at any point in time. Let's first talk about Lern Alternative Investments Fund, which is probably our flagship fund in the market. LEIF actively manages a diversified portfolio of alternative funds from around the world, including many asset classes such as technology, precious metals, long-short equities, and even digital assets. Turning to this slide here, I think it really sort of tells a story about LEIF. LEIF was created to democratise access to hard-to-access funds for investors around the world. We identified that too often it was the larger end of town or institutional investors that were getting access to these types of strategies around the globe, but individual investors, whether they be wholesale or retail, could not access these funds. Therefore, we established LEIF to democratise this. What's really important to understand with LEIF when we think about returns, or as an investor when you think about returns, is for that additional level of risk that I'm prepared to take, am I being compensated accordingly? So since inception, LEIF has annualised approximately 9.34% per annum, and over the same period of time, the ASX 200 accumulation index has annualised 7.06% per annum. But what's really important is how LEIF has generated those returns when considering the level of risk that it's taking. And the top right chart here really illustrates that since inception, LEIF was carrying volatility of approximately 4% less than the ASX 200. Then we hit COVID, And since then, LEIF has been trading approximately at 7 to 8% less volatility than the ASX. So that means we're protecting downside risk for investors with that focus on capital preservation, but also generating good solid investment returns through all market cycles. How we achieve this is by being primarily dynamic and active with the portfolio. Since July 2020, LEIF has an annualised turnover of 87%. And that's because when you consider in the alternative investments universe, you have short, medium and long-term thematics, and you have to be active within those thematics in order to consistently generate these returns and protect downside risk. And we'll provide that in some examples around that now. Looking at the current portfolio with LEIF, these are the 14 underlying strategies that we currently hold. Strategies that are ring-fenced with the red line illustrate strategies you can no longer access as an investor. So they can only be accessed by coming into LEIF. What you'll also notice here is that the dark grey boxes denote wholesale funds only. So not able to be accessed by retail investors. However, LEIF is a retail product. So again, it comes back to us democratising access to really hard to access investment opportunities and funds around the world. And this portfolio here, as I mentioned before, has approximate turnover about 87% per annum. And that doesn't mean we're always bringing funds out and bringing funds into the portfolio. What that might mean is that, for example, the top left box here, our global long-short equity strategy, is currently at 16%. Well, previously that's been as low as 5 to 6%. So we're moving weightings around in the portfolio that are in line with the investment committee's view on prevailing market conditions. Just take you through a couple of examples of our long, medium and short-term thematics within LEIF. Firstly, our global long-short fund that I just touched on, and this is a good idea of a long-term thematic. This manager has been in the portfolio since day one, but we've moved our weighting accordingly over time to suit the IC's view on how that manager might perform in foreseeable market conditions. And what you can see here, back in early 2020, we made a very small redemption or partial reduction in this manager. We did so again in May 2020. And then shortly thereafter, we felt after all this stimulus had come into the market, that this manager was primed to have a good period of performance ahead over the next 2 to 3 years. So you can see the additional investments we made in July 2020 and again in September 2020. There was then a drawdown in this manager. But our decision here to do this has been obviously vindicated with the performance that we've realised in that manager since then, returning over 40%, and even last financial year delivering the fund 15.5% net return to investors. The second thematic we're focusing on here is medium term. Again, this is another manager that's been in the portfolio pretty much since inception. So it came into the portfolio in 2018. And you can see here that over the period of the last few years as well, we've been quite active with this manager. This manager was really important to performance across the financial year 2022. As an investment committee, we sat down in the end of 2021. We were not convinced that inflation was transitory. We were convinced that inflation was going to remain high for some period of time. We were convinced that rates were going to start going up as well and the impact that would have on the market. And generally, when you have these big economic dislocations within the market, trend following managers perform exceptionally well. So we significantly increased our position to this manager in July 2021. It then returned 60% for the FY 2022 year, when traditional asset classes and traditional investments actually fell during that financial year. And LEIF delivered a return of 11.5% for FY 2022, and this manager actually made up half of that return. Once this thematic had played out, we then reduced our weighting in January 2023, earlier this year. But then we felt it was time to put risk budget back onto this manager as economic market conditions started to dislocate again and trend following investments become more vindicated in current market conditions and beyond. The final example I'm going to provide you today is one of our short-term thematics. This is a volatility arbitrage fund that we've actually been following for about 2 to 3 years. As I said previously, sometimes we'll have managers that are effectively sitting on the reserve bench waiting to come into the fund, and this is a great example of that. We met this manager during the dark days of lockdown. We really liked the individual behind the fund, very highly credentialed, very strong background in mathematics and actuary. And so we looked to make an initial allocation this year back in March 23, as we could see how this manager had performed in both positive and negative markets, and also markets with strong levels of volatility, but also soft levels of volatility, and had performed well in all these conditions. So we made an initial allocation and stepped into the fund in March 2023. We increased that allocation in May 23 this year. It was quite short term. And since then, we've seen that manager be one of our top performers in LEIF over the past 9 months and a strong deriver of performance. So in summary, LEIF was created to democratise access to exclusive investment opportunities in managers from around the globe. And to this day, LEIF approximately owns about 40% in Australia-based managers and 60% in international managers. So we are really democratising this access on a global basis. It's doing this, however, by providing monthly liquidity to investors, and I think that's really important. We've seen countless scenarios where investors have tried to enter the alternatives market. They've perhaps chosen the wrong manager or wrong investor, and then they've been locked up because of liquidity constraints in that strategy. So we're about providing that liquidity to investors. So if we're not delivering for investors, well, they have the right to take their money out of the fund on a monthly basis. And we think that's really part of the democratisation process that we're offering investors with LEIF. In addition to that, LEIF has generated net returns of 9.34% per annum since inception, and it's delivered those returns on half of the volatility of the ASX 200. It's a diversified portfolio of funds that are actively managed, and to deliver these consistent returns, particularly in the alternative space, you need to be highly active by managing short, medium and long-term themes. The second fund in our stable is the Lern Mortgage Income Fund. Lern focuses on generating high-quality risk-adjusted returns over the short to medium term for investors. It's an asset class that we see that's really highly attractive at the moment. As the RBA has raised rates over the past 18 months, Lern has really benefited from this because as old first mortgage loans in the portfolio have rolled off and we've replaced those with new highly vetted deals, we're pricing those at a margin above the RBA cash rate. As a result, our annualised return in Lern since inception has now increased from 7.3% per annum to now 9.5% per annum as of the 30th of September 2023. And that 9.5% per annum is actually realised by investors on a monthly basis. We pay income to investors on a monthly basis, and we're also democratising this asset class compared to your traditional contributory mortgage asset class within this space, whereby investors have to go out there and pick individual loans, and then they're bound to that loan for its tenor. Whereas Lern is democratising this by managing a portfolio of, say, 12 to 20 loans at any point in time, all with different return profiles and all with different tenors as well. And that allows us to provide quarterly liquidity to our investors as well when investing in a portfolio like this. This is providing you 4 different examples of Lern. One thing in particular as well, we really pride ourselves on diversification from not only the borrowers that we're dealing with Lern when we're providing these first mortgages to them, but in addition, the geography of these borrowers. As you can see here, we have a number of examples, one being in Oakleigh, Victoria, another being in Bonnybrook in Victoria, which is part of the big Western Growth Corridor in the western suburbs of Melbourne, Canberra ACT, which we see as a really strong insular market, and also Ballarat North. You've seen a lot of expansion in these sort of semi-rural and rural communities now around Australia. As you can see here, the LVR on the first 3 examples is 60%, and the final example is 50%. Most of these loans are quite short in tenor as well. When we price loans, we're initially looking at somewhere between 9 to 18 months maximum, which is less than your traditional contributory mortgage market. And you can see the interest rate's been derived by these investments now as the RBA cash rate has risen of late. We're seeing 9.5, 10.25, 10.7 and 9.25 respectively, which is allowing us to provide investors that annualised return of 9.5% across the portfolio. And currently Lern holds 15 loans that are actively managed. How do we do this? We see a lot of opportunities in this space. And in this space, there are far more no's than there are yeses. Quite often developers are always looking for capital. What we have been successful in of late in the last 12 to 18 months is we haven't been looking to take construction risk In Lark, we've been focused on land banking and horizontal development. We'd prefer to leave the construction risk to other lenders in the market, and we're happy to take a discount on returns as a result when compared to taking that construction risk. We go through an extensive due diligence period, and one thing we really pride ourselves on is approximately 70% of the portfolio is through repeat borrowers. So we know these developers and builders well. We're going back and dealing with the same parties time and time again, and that's how you build really good relationships between the lender and the borrower. And that's one of the reasons why we've actually been able to avoid a lot of the headaches that have been reported in the media over the last 18 months in the construction industry. And I'm proud to say that the investment team's done a great job, and we haven't had any headaches in the portfolio as a result. So in summary, Lark's returning, and when we first set up Lark, the aim of the fund was to return at least net 7% per annum in the previous RBA environment. The fund is now delivering returns of net 9.5% per annum. We see that actually continuing to increase marginally over the coming months. Interest is paid monthly to investors. Liquidity is on a quarterly basis as well. And we're all about focusing Lark on delivering those really strong risk-adjusted returns. The ASX 200 over time delivers 8% per annum with equity market risk, and a portfolio of first mortgage securities in Lark at the moment is delivering investors 9.5% per annum, with monthly income being realised into our investors' cash accounts. The final fund in our stable is the Lern Select Alpha Fund. This fund was established because our fund managers that we support via LEIF started approaching Lern directly and saying, you've been big supporters of us and you've helped us get established in our businesses. We would now start to like sharing with you and your investors directly our best ideas. So we rate these managers our preferred managers, and now they're bringing us their core investment ideas for co-investment. And so as a result of this opportunity, back in 2021, we decided to set up our third vehicle, being the Lern Select Alpha Fund, or better known as LSAF. Since inception, LSAF has made approximately 15 investments, of which all of those are private. We've been really impressed and happy to see some great returns initially in the portfolio, as some of these private investments have started to gain institutional recognition, and additional capital has come into these high growth opportunities at much higher valuations than when we first participated in earlier investment rounds. The fund itself seeks to generate returns of net 20% per annum over a 5-year period, and I'm pleased to say it's on track to deliver on this mandate requirement. Taking you through 3 examples, because everybody wants to know in a portfolio like this, what are the key ideas and what's really done well for the fund. The first is Skycraft, which is one of the initial seed investments in the portfolio. Skycraft is revolutionising the way in which commercial aircraft around the world is tracked. The business was set up out of Canberra by ex-Defence Force senior management. And what we've seen already is government recognition with Skycraft. That's Air Services Australia, Airways New Zealand getting behind this company. And what we've also seen is the business has had 2 successful satellite launches now. These satellites go into space on the back of Elon Musk's rockets and effectively are opened up and then track commercial aircraft around the world. Why this is transformational in the industry, it's allowing real-time signals to come back to these aircrafts and the air traffic controllers on the ground. Why this is imperative, and a great example is, if Skycraft existed when MH370 disappeared, you know exactly where that aircraft is today. It also creates huge efficiencies in the biggest cost that airlines have, and that of course is fuel. Having real-time tracking data for this aircraft is why this adds a lot of value to potential large infrastructure groups around the company. And we've already seen 2 very large infrastructure institutions come into Skycraft in the last round, which as a result of that allowed us to realise our first significant uplift in the business. But we think there is plenty more upside in this company to go, and we're really excited about it. The second example I'm going to share with you today is a business called Urban Rest. Urban Rest has made itself known as the premier operator in the build to rent, but also corporate accommodation, providing apartments to your tier 1 corporates around the world and matching that with tier 1 suppliers. Urban Rest clients include the likes of Disney, Amazon, Google, Apple, the top 4 accounting firms, the top legal firms in this country. And what Urban Rest is doing, it is effectively signing off on supply or acquiring supply of apartments around the globe, UK, Singapore, Australia and New Zealand, and matching this supply with the demand from its corporate clients. And since we've invested in the business in 2021, we're seeing the number of apartments Urban Rest managing increase from 96 to above 400 today, and we think the business is well on track to hit its 5,000 apartment target mark by FY27, which translates to a business generating $350 million in top line revenue and circa $50 million in bottom line revenue. We're really excited about being on the growth journey with Urban Rest as well. And our final example in Lern Select Alpha Fund, LSAF, is one of our most recent investments, Gasco. It's an established Mongolian gas discovery, gas exploration company. We invested in this business in March at a share price of $1.50. They're just closing on their final round at the moment, which is $3 a share. So the fund's realised 100% uplift in the last 6 months, and we're expecting a significant liquidity event with this business in the short term via a listing on the ASX in the first half of 2025. In summary, LSAF was created to provide wholesale investors access to some of our most exclusive opportunities in our fund management professional investor network. The fund is aligned with investors by historically charging only a performance fee and no management fee, and that was really important to us from day one. And also we've decided to mandate this fund to hard close at 20 million. And that's not 20 million raised in fresh investor capital. That's when the fund's value actually gets to 20 million. It's all about preserving returns and enhancing returns for investors as well. So you want to keep the fund size low, particularly with some of those opportunities I just discussed previously. So just to wrap this all up, our 3 funds are obviously very different, and it goes back to what I said at the start of this presentation. At Lern Funds, we're here to offer investors a broad range of investment opportunities. LEIF attacks this via giving investors access to a diversified portfolio of global alternative managers that's actively managed on an ongoing basis. It's also been recognised in the industry last year, taking home the best multi-strat fund in the country. And this year at the same awards, it was also recognised as being the best supporter of Australian managers in the market. LARC operates a diversified range of first mortgage securities. It's currently returning investors 9.5% per annum net with monthly income. And our final fund in our stable is LSAF, which was established for our investors to gain access to the best ideas from our preferred managers and professional investor network, and is on track to deliver net returns of 20% per annum over a 5-year period. I thank you for your time today. I thank you for listening and learning more about the Lern Funds business. And should you have any questions about Lern Funds and any of our strategies, feel free to reach out to the office directly. Thank you.